There are $140 trillion floating around in the world's money supply. Now, what's interesting is a lot of people think that since the United States is technically the wealthiest country in the world, they would have the largest money supply, but that is not true. If you look at this chart made by Visual Capital and follow my head, which is the cursor, you see this green line, this Benjamin Franklin looking guy. It is $22 trillion out of the 140. And you could see the EU, the euro, it's about the same, 22 trillion. But let's look at China's currency, this big red guy, the yuan, $46 trillion. That is more than all of the euros and all of the US dollars put together. 2 trillion more. Now, when we're talking about money supply, I'm not just talking about cash or just coins. I'm talking about the M1 and the M2. I'll give you a very quick and easy breakdown about it. The M1 money supply includes cash, coins, it also includes checking accounts and other traveler's checks. The M2 money supply includes the M1, but it also includes savings deposits, money market funds, and small time deposits under about $100,000. Let's talk about the distribution of the largest money supplies, which would be China, the EU, and the United States, because they represent about 90 trillion out of the 140 trillion floating around. A lot of you are thinking, hey, look at China's money supply. It is this much higher just because they have a much larger population. That's partially the case, but if you go back in time, even to the earlier 2000s, this is when China still had over a billion people, and their money supply was either a little bit smaller or just as large as the United States. And the US at the time had maybe 250 million people, so that wasn't the reason. To drive the point home, let's just go back to the year 2000 and look at how small China's money supply was. They had $1.6 trillion for about 1 billion people. The US had 4.9 trillion for, like I said, about 250 million. Compare China's money supply right here to the yen right here. That's that 1,000. And look, there were maybe 200 million Japanese people or less, and they had a money supply of 8.7 trillion, even larger than the United States. By the way, I just checked. The population of the United States in the year 2000 was 280 million people. My point still stands. The beautiful truth about the main increase of the Chinese money supply was that their economy tremendously developed, and now they are one of the wealthier ones. Not per capita, but they do have a much greater access to overall resources and just wealth than they did 25 years ago. Think about it this way. Back in the year 2000, when the Chinese money supply was so small, they had about 1,600 yuan, or about $200 of money supply for each of the population. While the United States, back then, in $4.9 trillion in the money supply, they had about $17,500 in the money supply for each American. Now, if you go to China's money supply, they have about 33,000 US dollars for every Chinese citizen. The US has about $60,000 for every US citizen, and the EU has about 59,000. Like I said, most of the reason why the Chinese money supply increased so drastically is because of overall economic development, but part of the reason is the same reason why the money supply in the US and the EU went up so high, and that is because of the depreciation of the US dollar over time, especially after COVID. You could also lump in after the 2008 recession because the US did print so much money back then. Both economic emergencies saw a tremendous printing of US dollars, and whenever that happens, the value of the currency drops, and of course, we eventually have to deal with inflation. But the rest of the world also has to deal with this big problem. Since the US is the world's most dominant currency, about 60% of all world trade is conducted in US dollars, and about 58% of all global reserves are US dollars. When there is an increase in that supply, it means it becomes a lot cheaper. It means that US imports or exports become a lot cheaper for the rest of the world to buy. And Europe, China, Japan, they have to deal with it. They have to deal with American products becoming cheaper. So what do these countries do? They start printing a lot of their own money to make sure that their exports stay competitive against the US. And do you know how the People's Bank of China, the Bank of Japan, or the European Central Bank start issuing their currency? They start buying billions of US dollars and trading them for their own currency. Now, that is not the only way that they can issue their own currency. They can literally just print it from the central bank and boom, it gets released. The reason why they're buying so much US dollars and exchanging it for their own currency is to keep trade competitiveness, like I mentioned before. It is an incredibly crazy failsafe because other countries have to start cheapening their currency to make the American dollar stronger. So these countries automatically start preventing the US dollar from going into too much of a free fall. It also means that these other very large and powerful banks have a vested interest in keeping the dollar strong enough so we can keep importing their goods and services. Now, yes, it's a nice setup to be the United States, blah, blah, it's good to be the king, but there can be a lot of shortcomings to this if our monetary policy is run incompetently. If the US overprints its money supply and other countries are trying to keep up and they start doing the same, they can run the risk of hyperinflation. And how on earth can the United States have its own currency propped up if other countries are experiencing hyperinflation? So yeah, we have to be very, very careful. Racking up $37 trillion in debt and almost paying $1 trillion a year in interest isn't really the best trajectory for the US dollar and the overall world economy. I hope you guys learned something from this post, and thanks for watching.